Ray Dalio, the legendary investor, has never been one to shy away from making bold predictions. And his latest forecast on China is nothing short of alarming. While many have downplayed the economic challenges China is facing, Dalio insists that the situation is far worse than most people realize. But what exactly is unfolding in the world's second-largest economy, and why is Dalio so certain that the collapse is not only inevitable but deeper than we think? China, once hailed as the unstoppable engine of global growth, has been showing cracks in its foundation. On the surface, it might still look like a powerhouse with its sprawling megacities, high-tech infrastructure, and global influence. But dig a little deeper, and you'll find that the cracks are more than superficial. The country is battling a housing market collapse, a debt crisis, and a shrinking working population, factors that are quietly undermining its economic might. Let's start with the housing market. For years, China's real estate sector has been the backbone of its economy, driving growth and employment. But today, the sector is teetering on the edge of disaster. Evergrande, once China's largest property developer, defaulted on its debts, sending shockwaves across the global financial markets. The ripple effect of this is still unfolding as other major developers follow suit. And here's where Dalio's insight becomes critical. He highlights that housing in China has been overbuilt for years. Ghost cities, vast, empty urban areas, stand as monuments to overambition and unchecked growth. And with millions of units sitting vacant, the market is primed for a full-blown collapse. What makes the situation even worse is that China's growth was deeply tied to this overextended real estate sector. As it crashes, it takes down construction companies, material suppliers, and banks, causing a domino effect that ripples across the economy. For an economy that has built so much on housing and debt, the stakes couldn't be higher. Now, let's shift our attention to China's staggering debt levels. Local governments and state-owned enterprises have been borrowing at an unprecedented rate. Dalio points out that China's debt-to-GDP ratio has soared to dangerous levels, and much of this debt is unproductive. It's money that's been poured into inefficient projects, wasted on vanity infrastructure, and now sits as a looming burden on the economy. As the ability to service this debt becomes harder with slower growth, defaults will rise, and it won't just be Evergrande. This could spark a financial crisis that reverberates far beyond China's borders. But Dalio's concerns don't stop with the financial side of things. He warns of a broader demographic crisis that could tip the scales further. China's population is aging rapidly, thanks to the long-lasting effects of its one-child policy. The country is now seeing a shrinking workforce and an increasing number of retirees. This shift creates a perfect storm where fewer workers are supporting more dependents. As the labor force shrinks, productivity drops, and consumer demand weakens, putting even more strain on the already fragile economy. The geopolitical climate isn't helping either. Tensions between China and the West have escalated, with trade wars, tech restrictions, and an overall decoupling between China and the U.S. becoming more pronounced. Dalio argues that these tensions will only compound China's internal struggles, further isolating it from global markets, technology, and innovation that it needs to reverse the tide. Many might ask, why is this happening now? Wasn't China supposed to rise endlessly as the new global superpower? The answer lies in unsustainable policies, over-reliance on debt-fueled growth, and the fact that no economy can defy the laws of economic gravity forever. Dalio's warning is clear: the collapse we're witnessing in China isn't just a bump in the road. It's a structural unraveling that could reshape the global economic landscape in ways we haven't yet fully grasped. But there's an important takeaway for investors: while China's collapse may spell trouble for some, it could also create opportunities for others. Dalio suggests that understanding these global shifts will be key to navigating the future. In times of crisis, those who see the world clearly and act accordingly often stand to gain the most. So, is China's collapse truly as catastrophic as Ray Dalio believes? It's hard to argue otherwise when you look at the mounting evidence. The question now isn't if, but when and how deep the fallout will be. If you want to stay ahead of these global shifts, make sure to like, comment, and subscribe. Let's keep the conversation going on what the future holds for China and the world economy.